How are you now? James Whelan here, coming to you, not live, but recorded, just to talk about a few things that I had going on in my note this week. Now, fascinating stuff, what's happening in Russia. I'm going to skip all of that, everything. Everyone's got a different theory on what's going on. Not my place, not my business, not anything. Keeping an eye on oil, though, because of it. That is a fascinating one. Now, my thesis last week on the Australian recession that we may already be in received some pretty positive feedback. Thank you very much for everyone who gave me the positive feedback. Hello to everyone who did not. It's a real debate as to whether we are or we aren't. Quite frankly, I think that we're at the stage right now where it doesn't really matter if we are in a recession or we aren't in a recession, because the RBA governor, and this is me playing the man, not the ball on this one, and that's my thesis of the week, is that the RBA governor, Philip Lowe, is going to be raising, or at least keeping it higher, for as long as he possibly can. In September, he's going to be switched around. He's not going to have the job anymore. He won't be the RBA governor anymore. It'll be replaced by some Labor person that's going to be put in. Probably an ACTU hack, whatever it is it's going to be, just so that the Labor can get the credit of being able to put in an RBA governor who's then going to be responsible for lowering rates, easing the cost of living crisis. Hopefully inflation will be battled by then. All Philip Lowe has right now is the chance to really, really spruik his legacy to be the guy who beat inflation back. And that is what he's going to do, because that's going to be based on what the rest of his career looks like. Board seats, head of super funds, positions, speaking tours, that sort of stuff that he gets now. That's going to be deciding what his legacy is going to be in the next few months. That's why I think it doesn't really matter what sort of a state we're in. However, I do believe that we are in a recession. Funny note, though, the ANZ, the Blue Bank, the ones that came out with that details on the declining credit card spend that they'd seen year on year, down 20% on travel, shopping, groceries, that sort of thing, which was one part of my thesis to showing that people had really, really cut back and that we're in a real big recession, at least for consumer discretionary recession, showing that. However, ANZ, the same senior economist, the chief economist from the ANZ, also came out and said that we're not going to see any change to the way that Australia or the world looks with regards to rate cuts and rate hikes. Everything's going to stay the same as it is, because he sees that household budgets are actually quite resilient. I'm just like, well, if household budgets are quite resilient, then why is credit card spending coming back so far? That's something that you need to really sort of look into there as well. The clangor that's in that is that, now this is part of the reason, this is one of the difficulties with being sort of doing the economics and trying to be the economist in this sort of thing. I've just got someone trying to call me, please stop. It's not a client, so that's the way it goes. The funny thing with this is, though, why would credit card spending be coming down if household budgets are so resilient? 1,000 theories, try and make it up as you will. One theory, maybe the people's credit cards are maxed out. I know mine is. That's the reason why credit card spending might be down. However, look, that's something to cook in. I still do believe that we are in some sort of a recession or close to it, but again, it doesn't really matter because rates are going to be higher for longer. Now, the next thing that's come up is a little bit more interesting for me. Came up over the last few weeks. I've been hearing things on podcasts. Obviously, India. You know that I'm super bullish on India. You know that I'm super keen on that particular part of the world. The next one that's come up for me again is Indonesia. That's been mentioned by Morgan Stanley. Their growth rates. I had some stats that were here. Indonesia's implementation. This is reading from the Morgan Stanley podcast from a couple of weeks ago. Indonesia's implementation of orthodox macro policies has also reduced the Southeast Asian nation's inflation structurally. That has led to Indonesia's public debt to GDP ratio being one of the lowest in the emerging market space at under 40%. Now that's pretty significant, their debt to GDP ratio. They've got a lot of room to move, a lot of space to grow, and growth is the key thing. And this is what's interesting. If you hear it a few times about Indonesia or about one thing, then there must be a trend going on. Pay attention. It's one of the things that I do, ear to the ground. Sometimes it works, sometimes it doesn't, but this time it sort of does. And then you see in the Financial Times talking about TikTok going, you know what, pivoting from where their main focus is and having a huge push into Southeast Asia. And the photo of the head of TikTok, not in a suit in front of Congress as he was a couple of months ago, just wearing just nice normal clothes for the Southeast Asian thing, presenting to a team in Indonesia. Absolutely sensational. He's in Jakarta, talking up a big game and really moving into there. TikTok, with all the marketing and all the spend and all the capacity and all the knowledge that they have, is focusing on Indonesia as being the next big place where they should be. Now, economies are not markets, so you can't just go and buy the Indonesian stock market or the MSCI index or the ETF or whatever you want to buy just because of that little stat. However, it is something to sort of keep in the back of your mind when you're looking at an emerging market that is growing in that similar sort of vein. Part of the reason why I'm buying India. There is an ETF for Indonesia. There are ways to access the Indonesian market as well. Send me a note and I'll let you know how it is that you need to get that done. Finally, worrying charts that were coming out yesterday, just talking about the heavy truck index when it reaches these toppy levels, and this is a new one for me, when it reaches these toppy levels, they usually coincide with equity market sell-offs in the US. We're seeing that the rally in the NASDAQ 100 has paused. It got to, so when sentiment soars, you see that these things that they usually sort of clock off, you know, the bullish bearish indicator right now, sentiment for the NASDAQ 100 is high and high, and this is at the end of last week. That was where the signal was to potentially sell a bit off. We've been proven quite correct with that idea to do so. I'm going to keep on going. And the last big one for me, and this is one that a lot of people have mentioned here too, investors, that what you receive in yield for the S&P index is the same, this is the forward 12 months, is the same as what you receive for US corporate investment grade bonds, and also the same as what you receive for the US 3-month note. There's no change or difference in the yield that you receive for those three things, except for the one guarantee that what you receive for a government bond or a note or one of those ones is a lot less risky than it is for being in the S&P 500. Now, that's one of the main basic sort of tenets of portfolio theory. If you've got two things of the same risk, you take the one with the higher return. If you've got two things with the same return, you take the one with the lower risk. That's the basic thing. So right now, you've got to think about where your risk is and where your yield is, and you have to make that switch, and people are actually starting to do that. I'm not saying the market's going to be a calamity. I'm just saying it just continue this switch over as people have an actual guarantee, as close to a guarantee as you possibly can do, in investing in the US government with their Navy, than you do in some other stocks. That's sort of just the easiest way to do it. I see the US dollar as being a growing asset right now, so stay unhedged there. Long India, long bonds, and underweight the big tech for now. Look, that's pretty much just the ideas that we've got. Thanks very much, and that's your 7-minute wrap.